Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 14th of June. Starting off with the FTSE 100, which seems to be hugging the floor of that rising trend channel from back in January. The 8150, the nominal level, that was also that low there at the end of May. What we really want to see today is an end-of-day close back above the 50-day moving average. It's 8175. If we can do that, then there's a chance of pushing up to 8300. Otherwise, on the downside, we have the old April peak around 8040, 8050, and hopefully that would come in for support. RSI on the wrong side of 50 and a failure below RSI 50, which normally leads to the downside as a leading indicator on the downside. So it's that versus the rising 50-day line, which are currently neutralizing each other. Next market is the DAX, and here we have broken down out of that channel for the first time since basically the autumn. Below the 50-day line there, 18,350, there's the risk of a move down to 17,800, basically the late April support area for this market. Need a quick recovery of that 50-day line to get us back in the 18,300, 18,800 range that we were enjoying last month. Dow is next, and here the picture also of a market which is near the floor of its rising trend channel. The floor there around 38,500, and above that hoping for a break of the 39,100 area to take us back to 40,000. We have that rising trend channel from back in September, and I suppose so trying to work out exactly what the angle of the resistance line there. It could be towards 41,400, but obviously we're a long way away from that, and if we do break down below that October line, there's the risk of 37,700 all over again. RSI not a good look, double failure at RSI 50, so according to that and the falling 50-day line, we are heading back towards testing support. Bitcoin is next, and this has also been disappointing in the sense that the inverted head and shoulders that appeared to be there last week was wiped out by the non-farm payrolls, but we are still above a rising 50-day line there at 66,000, and the floor of that channel there from back in October at 65,000. Hopefully that area will come in as support for this market. The negative at the moment really is the way that the RSI has failed below neutral 50, and it's at 46, so echoing what we're seeing at the indices. Moving on to gold, and here it's also been a situation where we're trying to hold the rising trend channel from the end of the year. Floor of the channel and recent May support 2280, so we want to hold that. Otherwise, the next buy trigger would be an end of day close above the still rising 50-day moving average around 2357. So that is the range at the moment. Moving on to the stocks, and starting off with one of the more obscure ones, which is Asian Energy, and here we have a picture where it was looking encouraging. We've got consolidation above a rising 50-day line. I call that sideways shuffle, and a breakout too. Initial target here towards 30 pence, which we're looking for by the end of this month, while we remain above that rising 50-day line at 17 pence. Next up, the current dish of the day for the punters, which is barren oil. I've been predicting the 0.13 target there at the top of that rising trend channel like a broken record for many weeks, and finally it looks as though we are within spitting distance of that. The ideal scenario is that we stay above the 0.9 level and head up to 0.13 over the next week or so. And what would be also helpful is if we went into a golden cross with a rising 50 and 200-day moving averages. If we get that, the run up to a golden cross tends to be the strongest part in the cycle, and that should give us at least the 0.13. The hope, though, is that we don't get these one-day wonder spikes that we had. This is different from what we've seen before. Next up is BSF, and here a stock which was hot, I think last year or the year before, but has become rather less hot. But it looks as though there's a change here. We had a gap close buy signal yesterday, so the gap down close filled on yesterday's close. We've also broken above the 50-day line and above the falling wedge there, which has been there since October. That suggests that we should at least be able to get up to old support around the 6 3/4 pence area, but ideally there's another test now of the 200-day moving average, in this case at 8.3 pence, and that could happen by the end of this month. Bradda looking good as well at the moment, and the reason for saying that is we've had an extended sideways shuffle along a rising 50-day line since basically April, and finally breaking out through recent 1.7 pence resistance. Above that, on an end-of-day close basis, looking for the top of that rising trend channel base from December at 2.4 pence by the end of this month, and it really is quite a relief to see the shares finally turning around, backed by a resistance line in the RSI window, an uptrend line there rather, and also the way the shares have gapped up today, and that's also an added sign of momentum changing in the shares. But the main thing here is we stay above the 50-day line at 1.57 at the moment. On to the type of stock I don't normally look at, but just in case it's going to be a big winner, I'm looking at N.Brown. Here you can see that if you can ignore the very low trading volumes, we had the gap higher through the 200-day moving average, and we've gapped higher since then. So this looks like a bear trap gap reversal, and the target here would be 28 pence while we're above the 200-day line, around 17 3/4 pence. A stock which came to market just a few weeks ago. It hasn't had a great start, but just the first hints that we've got a turnaround here. The reason for the hint, and it is only a hint, is that we've gone much lower for June, but the RSI is actually higher than it was back in May. Not much to go on, but that could be a sign that we will head back to the initial support here for the shares around 1.6 pence over the next couple of weeks. Next one is Helium 1, and here just checking on the aftermath of the placing at 0.5 pence. There's this rather obscure support line projection which seems to be working from back in January. That's currently pointing at 0.5 pence quite naturally. But interesting, we've had 2-day support at 0.6. Might need another day or two to establish support there, but still looking for the shares to pop perhaps towards 0.8 or 0.9 is the best case scenario target over the next 2 to 3 weeks. And that might happen even if we have to have a retest of the 0.5 area. But obviously people who took part in the placing at 0.5, relatively happy at the moment, one would guess. A company which is showing Helium on how to do it at the moment is Helix Exploration. Here we've got this rising trend channel, and the top of the channel there heading for 34 pence, which we're looking for perhaps as soon as the end of this month, although I would give it to the end of next month. But obviously the shares floated at 10p, and it's been absolutely fantastic in terms of the performance and a great boost to the small cap market. Moving along to a rather less high profile situation, Inspiration Healthcare. Here again, one of those situations where it's just worth looking at just in case it's going to turn around. We've got support coming in at the floor of that gap down, so around the 20 pence level, and above that looking for the shares to head back to April support there around 28 pence by the end of this month, and perhaps even much more, because this could be a sort of cup and handle type of reversal. Kendrick is next, and doesn't get much publicity anywhere, but here we have broken above the 50-day line there for the first time since January, and also we've had a gap close. So we gapped down back in April, and we closed that gap yesterday around 0.38, above 0.38, looking for the shares to head up to as high as 0.7 pence by the end of next month. But the main thing is holding that 0.38 area. Metals Exploration is next, and here rising trend channel. We've zigzagged off the top of the channel. We hit that back in April, and looking for the shares to return to the top of the channel now as high as 6.25 pence by the end of next month. The only thing missing maybe is an end of day close or a weekly close back above the 50-day line, currently at 4.67 pence. Moving on to Oracle Power, which has bounced back a bit, keeps bouncing just when you think maybe that it's all over. But here we've hit this support line projection from back in November, 0.017, and looking for the shares to at least fill the gap up to 0.03 pence, even if they fade after that. Best case is that we retest the 0.04 area by the end of next month. On to another punting situation, a punting-friendly situation, Physiomics. Here we've got the rising 50-day line gapped up above it. It's like a sort of mini bear trap highland reversal that we've got going here. In fact, the 200-day line is also rising, so that would suggest we're going to a golden cross scenario, and we should start accelerating to the upside. Target here up to 2.3 pence at the top of that broadening triangle from back in September. On to Raspberry Pi, which has obviously hit the market with quite a bang. Great boost in the market as well as the Helix situation. Here we've got a rising trend channel. This is all obviously guesswork. At the top of the channel there looks as though it's heading towards £5.40. We could get that by the end of next month, and ideally we hold above today the halfway point of today's range, around £4.50, ahead of a move to £5.40 or so. But obviously very early days yet, just that idea that we could head to £5.40 or thereabouts. Finishing off with Renalytics, and here one of the most, gets the prize for them, one of the most difficult charting situations around. Looks like a heart trace monitor, but we've got that falling wedge there. We've gapped up within that wedge, and after gapping down back in May, so it's potentially an island reversal. End of day close above 18 pence is what we're looking for to get at least a 23 pence target at the 50-day line. Best case would be back up to the 200-day moving average at 34 pence, which the shares like doing, and they have done that earlier this year, if only for one day. Ideally, we stay above the floor of the latest gap at 16 pence, so it's a reasonably tight risk-reward there. That's it from me today. More updates over the weekend.